Oh, well, yes, a lot of companies are reacting to their earnings in the quarter gone by. Let's start with some which have disappointed the street. Case in point being the gas marketing companies, where the margins have plummeted, the brokerages have been disappointed and they have cut target prices both for MGL as well as Gujarat Gas. Let me start with Gujarat Gas then, wherein the revenue growth was steady, but the margins have plummeted to sub 5% level, and this compares to the 12% margin level that we had seen just last quarter. The street was expecting a margin compression, but it was expected that the number will come between 6 to 7%, but the performance was much worse. The brokerages as a result have cut their target price. On Mahanagar Gas as well, the margin came around 10% versus the street expectation of around 20%. However, the positive for MGL is that it is the cheapest in the sector, so that is something to track. Citi, for instance, says that EBITDA margins have collapsed from double-digit levels and the company was unable to manage it unlike its peers. Other than that, Endurance Tech is the other stock on our radar. The revenue came down a tad bit to 1890 crores versus over 2000 crore last quarter, and the profits have halved to 95 crores versus 190 crore. JSPL is the other stock which is reacting to its numbers. The margin performance was a bit of a disappointment because the margins declined to 26% versus over 40% that we had seen last year. Again, the street was expecting some bit of compression, but it was expected to come down to around 30% level. So there is a bit of disappointment coming on the margin front for a lot of companies this quarter. Now, talking about some of the companies which have actually surprised us and are reacting positively to its earnings, Latent View is the case in point, wherein the revenue has jumped up by 14%. The reported profit has doubled, but do remember there was an exceptional gain this time around. On an adjusted basis though, the number has jumped up by 26%. Redington has reported the highest ever quarterly profit, and there we have seen the profits becoming 4x of what they were last year to 140 crores. The revenue from operations has also been steady and the margins have also expanded to 2.5%. Aster DM Healthcare is the other stock on our radar. The consolidated revenue have jumped up and the profits are up 57% to 170 crores versus 107 crore last year. Lastly, talking about IRCTC, which has been in focus for good and bad reasons, but today the stock is reacting positively to its earnings. The revenue have jumped up by 141% and the profit have also doubled, more than doubled actually, and that stock is reacting positively.